Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Thursday, June 15th, 2023, and I'm pre-recording this Trading Places Live for a bit later this morning. Currently, we've got futures that are pointing a little bit lower. It's post-Fed day. Options expire tomorrow. Not too surprised. It's somewhat contained, but we are seeing all of the major indices lower this morning. Dow futures down 54, S&P 500 futures down 15, NASDAQ futures down 102. That's been the index that has seen the most gains and probably has, well, I shouldn't say probably, does have the most risk in terms of options expiring on Friday and possibly into the early part of next week. NAS futures down about 2/3 of 1%, whereas the S&P is down about 1/3 of 1% and the Dow 0.15%. So clearly, we've got futures a little bit weaker on the NASDAQ, so maybe some of those growth names that have been taken off seem like they never want to come back to earth. Maybe we're going to see a little bit of profit taking there, at least to start the day, and then we'll see what happens throughout the day. Crude oil up 74 cents a barrel, back just above $69 a barrel, and the 10-year Treasury yield up 3 basis points, 3.83%, again on that high range or high level within the range that we've been seeing over the course of the past few weeks. We'll talk about that in just a little bit more. But first, let's go through today's agenda. I'll start off with the daily market recap, talking technically. Chart of the day. This is an interesting one. We saw a breakout. It's been an area that struggled on a relative basis, but that may be changing. Then I'm going to take a quick look at the Dow 30. I'm going to try to go through all 30 stocks quickly just to give you my very quick outlook on what these stocks look like. Then we'll get into earnings spotlight and we'll wrap up with the 3 you must see. But we got a full slate. So let's go ahead and jump in and get started. First of all, on Wednesday, we had the Fed meeting. Fed decided to pause, but they did give an indication that they are not done raising and that they are looking at potentially raising again next month. So market, initially, we saw the market pull back, and then it was business as usual. We saw a nice little rally again in the afternoon. A little bit of volatility, not nearly as much as we normally have after the Fed meeting, which I was pretty surprised by. I thought for sure we would have an extremely volatile day or afternoon, and it really didn't turn out to be nearly as volatile. I mean, the market was up, and then initially we went red, and then we came back and we went higher. And then, well, the Dow never really participated in it, but the NASDAQ ended up moving back up, as you can see, 105 points on the day, finishing above 15,000. It's been a long time since we talked about that number on the NASDAQ 100. But the Dow was down 2/3 of 1%, down 232 points. S&P 500 was up 3.5 points. That was just, barely up, less than 1/10 of 1%. As I mentioned, NASDAQ up 0.7 of 1%. Eclipsing that 15,000 level. Mid caps, though, and small caps were hit yesterday. And I'll be honest, I thought those were the two that might escape this week simply because they had not moved nearly as much over the last couple of months as we've seen on the NASDAQ and the S&P. So I thought maybe mid caps and small caps would be spared, but they were not. Mid caps down almost 2/3 of 1%. Small caps down 1.35%. So we definitely saw some selling in that area. Check out the transports, though. I had been mentioning 14.5 is overhead resistance. We went right through it yesterday, finished at 14,642. That was up about 1 1/3%. Big push higher in transports. That is good for the S&P 500. When the transports get going, and you might look at this chart and say, well, they're not exactly going. Well, they have moved up now to about a 3-month high, so it certainly beats the alternative. We did have a breakout with a double bottom, so that's good. That normally leads to further advances. So if the transports go, generally that's going to take the industrials with them, and that is normally really good news for the S&P 500. So we'll see how all this plays out, but certainly it was a bullish development with the transports. Technology up 1%. That was your leading sector again. They just, I don't know, investors can't get enough of technology stocks right now. Healthcare and energy, though, both down 1%. So it was more of a mixture, first of all. We've been seeing a lot of the sectors rising. A lot of areas have been going higher. Breadth has certainly improved a ton. Yesterday was a little different. We saw technology do well, but the next three groups, I don't have them featured here or shown here, but the next three leaders among sectors yesterday were defensive groups. And then on the bottom, you can see a defensive group, healthcare and energy. Again, both down a little over 1%, both, among the weaker areas of the market, not yet able to really sustain a move through the 50-day moving average, unlike many of the other areas. So I think we've still got technology, obviously, a leader. That is the area that I think is most vulnerable over the next 3 to 5 days. But I thought it was vulnerable the last couple of days, and we haven't really seen anything of significance to the downside yet on technology. So maybe that's coming, but when you look at the chart, or when I look at the chart, I see that PPO turning back up again. It had a negative divergence when it first broke out, but now it's starting to eliminate it. And that's one of the things you always have to watch for on the PPO. A lot of folks are a little bit premature in calling a top, because a lot of stocks that are in a sustained uptrend, when they break out, they almost will always have a negative divergence. Almost. If they've had any kind of a pullback or any kind of consolidation at all, that will bring the PPO down from an elevated level. And usually when you make the breakout, you're not quite up to new highs on the PPO. But the question is, does that trend, is it sustained? If it's sustained, you could see that PPO turn right back up and move to new high. That's what we're seeing with technology. So I'm not sure at this point that I would be looking at a negative divergence or calling this slowing momentum in any way. Look at the volume picking up as we've made this breakout. So I don't really see signs of slowing momentum. I like to see a number of different signs corroborate and confirm slowing momentum. And here, really not seeing any at all, but still overbought, no doubt about that one. Within technology, wanted to point out semiconductors up another 253 points, 99.09, right up against key resistance, and they just don't care. They just keep going higher, up another 2.6%. And the two stocks among the leaders in the semi area, Intel up 5%, making another big breakout. This one has been one that, back at the end of March, I think it was, when it made this breakout, I said, is Intel going to emerge as a new leader in the semi space? Well, we got a quick resounding no with the 2-month downtrend that took us all the way back down to 27. Well, here comes Intel again. Now, is it a question of, or is it a statement that Intel's making that, hey, we're going to be new leaders? Or is it just simply a red hot industry group lifting, all boats, rising tide lifts all boats? Is that what we're seeing? Intel still has a lot to prove to me, but it's certainly a good first step coming back up and breaking above that 34 level. NVIDIA has nothing to prove to me. NVIDIA has already proved everything it needs to prove. Other than being extremely overbought, this is your leader, or certainly one of your major leaders in the semi area. So NVIDIA looking pretty good. Move on to the 10-year Treasury yield. So I mentioned this morning, it is up about 3 basis points. You don't see that yet on this chart, but we're up to about 383. So we're going to be really close. Yesterday, we hit a high of 385, and that was about a 3-month high on the 10-year Treasury yield. So we're going to open up somewhere close to that recent high, or at least when we open at 9:30 for the stock market. We'll see where that 10-year Treasury yield is, but it's possible we make another breakout here to the upside. Very, very possible. To the downside, continue to watch that rising 20-day. All right, S&P 500. So let's talk a little bit technically. So talking technically, S&P 500, 4,300. Yep, that was the 4,305. That's what we needed to get through. We've now seen 3 days in a row holding above that 4,305 level. Yesterday was volatile. We saw the S&P intraday pull back. I'll show you that intraday chart real quick. So this was the 2 o'clock announcement, and there was your initial move to the downside, and then boom, right back up again. And then we kind of weakened a little bit toward the close in that final hour. But overall, I thought it held up pretty well. But with futures red and knowing what we know about Max Payne, don't be surprised if we go back down and test that 43.05 level and see if we can hold it. I think over the next week, I honestly would be very surprised if over the next week, the S&P hasn't at least gone down to test 43.05 and possibly more. I mean, we've seen some crazy things around option expiration. We got a 20-day moving average that's down just over 52.50 or 42.50. If I said 52.50, over 42.50. So we got price support 43.05, and then we've got that 20-day rising 20-day EMA at 42.54. Those would be the two levels that I would be watching closely if we do start to see a little bit of selling. We haven't seen a whole lot of it for a while, but like I said, it is option expiration week. Anything goes. NASDAQ 100, I mean, there you go, over 15,000, just an absolutely stellar move that we have just continued to see escalate over the course of the last few months, really since that March low, March 13th. I mean, we've hardly had any selling from maybe this high right in here, first half of April down to this low. So what are we talking? 13.2 down to about 12.7. That's 500 points. That maybe 3.5%, 4% in that range. That's been the biggest pullback we've seen since March 13th. So market has just been straight up, especially the NASDAQ laden or the technology laden NASDAQ 100. All right, let's move on to the chart of the day. So chart of the day, if you like these charts of the day, I always encourage you to go over to earningsbeats.com. We'd love to have you. You can either sign up for our paid service, although you do have a 30-day no-cost trial, so you can kick the tires for 30 days. Or if you just want to get to know us a little bit better and you like these charts of the day that I like to show, sign up down here. It's a free Earnings Beats Digest newsletter, no credit card required. You can unsubscribe at any time. And we've got 3 newsletter articles that go out per week, Monday, Wednesday, and Friday. And usually try to get it out around 8:30 in the morning. It is a very simple read, 2 paragraphs and a chart, very simple. And I'll show you something, maybe that I would talk about here in just a second. I'll give you an example. Name and an email address, all it takes. Hit that subscribe button. And again, it's free, no credit card, and you can unsubscribe at any time. So what's the chart of the day for today? How about the railroads? I talked about the transports breaking out. Well, we rallied off of this double bottom right here at 26.50, and we established what looked like some pretty key tops, maybe around 29.50 to 29.70, somewhere in there. Never able to open or close above that level until yesterday, 29.95. So obviously a multi-month breakout right here. Now the big level is when you look at this double bottom, you have to go to the high in between. So the high in between this double bottom is 3,200. I think we have the room to run up to test that 3,200 level. Then we got a different ball game. But for now, I think we're going to move higher on railroads. Watch the rising 20-day. That should provide you support. The PPO is pointing up, coming off of the center line. That's telling us that the short-term moving average is pulling away from the long-term moving average. That's very, very bullish and shows us that we have that bullish momentum accelerating. So when I see that and I see successful tests of the 20-day, I start thinking very bullish thoughts until I'm proven wrong. I'm not saying we couldn't go back down below the 20-day. I'm just saying until we do, I think it's full speed ahead on the bullish side for railroads. That's only going to help the transports. So it's all these things working together. I mean, airlines have been going crazy if you've been watching those. So the airlines have already been going, but here come the railroads. I think they're next up. All right, let's keep moving. So want to try to go through the Dow 30. I do this every once in a while just to give you a quick take. I tell you what I'm going to do. This is actually an hourly chart. I don't want an hourly chart. I want to do a weekly chart. And let's just go 3 years. So let's do this weekly 3 years. And then I'm going to do this for all the charts. So you can do this when you have a chart list, just apply style to all. So now that all those changes I just made will be on all the charts as we go through them. So it's going to be a 3-year look. Little, not long term, but pretty long. I mean, going back 3 years, almost to the pandemic, start of the pandemic. Anyhow, Apple, look at the breakout here above this, all these tops, very bullish. The weekly PPO, strong. I think Apple looks great. Let's move on to Amgen. Amgen, not so much. Over the last 3 years, mostly sideways. I think we're at a pretty critical area of support on the chart. 210 to 220 has held on multiple occasions. 1, 2, 3, 4. Well, that one got down to 223. Let's call it 5. And now 6. This is 6 times over the last year and a half that we've been in this 210 to 220 range, and we bounced off of it. So short term, I think it looks pretty good. Longer term, got to get back through that 20 week at least. American Express, I think we're consolidating. I think this is a bullish consolidation. Nice move up. Here was your double bottom. We did break out above that top right there. Struggled holding it. I think really just going sideways here, but I think we're going to make a run for 190, 195. Boeing, I like the recent breakout, but it couldn't hold it. It might be something to do with options, but with industrials strengthening, watch for this next move over 220. I think that could be the key to a move back up, perhaps to the March high to go test 270. Caterpillar, I think we're forming the right side of a cup right now. Like the volume coming in over here on this side, went right back down to the 50-week moving average, now rolling back up. That PPO's crossing back above the trigger line and the center line. I think Caterpillar looks great. CRM, this is Salesforce. I think we're just trending higher above the 20, which is above the 50. Nothing bad for me on Salesforce. Cisco trending sideways. 52 is your high, 46 is your low. Let's see which way breaks. My bet is to the upside. Chevron, another one consolidating. Of course, energy has not been performing as well, but I would say your lows down around 130, highs around 180. We're right in the middle, maybe 157 right now. Which way breaks, I don't know. I would play the range for now. Walt Disney, one of the weaker stocks out there. I mean, this has just been horrible. We've had a big rally, and Disney just cannot get going. Many of the other stocks that struggled during the pandemic, like Disney, the cruise lines, the airlines, they're all on fire right now. I don't know what's going on with Disney, but with technical analysis, you don't ask a lot of why questions. You look at the chart, and the chart's telling us it's just not a good stock right now. Stay away. Dow Holdings, nice rally off the low from September of last year. Sideways consolidating. We got a double bottom right here, 48 to 49. Watch that. As long as that holds, I'm okay with it. Goldman Sachs, I see a little bit of a symmetrical triangle. Connecting the highs across here, they're getting lower and lower. You connect the lows, they're getting higher and higher. So we're squeezing in this range. Which way does it break? My guess is to the upside, but we got to see it first. Home Depot's been downtrending. This is another one that maybe it's not as weak as Disney, but it certainly has not been very strong. A lot of volume here, but also a lot of volatility back and forth. We do have a slight uptrend, but I think the double bottom here is marking big support at 260. And I think all of these highs coming across here up to about 330, that's the range. It's a wide range, and we're right in the middle of it. Honeywell, long-term sideways consolidation. We're in the middle. I don't really see anything at this point on this chart. IBM, a slight, uptrend in play over the last 3 years, rising highs and rising lows. So I would suspect we're going to go back up and challenge that 145, 147 area. Intel, this one looks good. I mean, again, or is it going to be a head fake like we saw back in March, or is this the real deal? That was so far this week, very, very strong candle. And look at the volume. We still have 2 more days to go, and the volume is already up at 186 million. So if we just keep up that pace, we're going to be at 300 million, which would be one of the highest weeks worth of volume over the last 3 years. So Intel is seeing volume and it's seeing movement to the upside. That's a good combination. Johnson & Johnson, sideways action. Watch the lows at 150. The highs up at about 180. We're in between. I'm not really seeing a whole lot here at this point. JP Morgan, doing better than a lot of the banks. I'll give it that, but still not great. I think we've got a nice rally off of the September low, maybe actually October low. And now I think we're just sideways consolidating again, 123 or so to the downside, maybe watch about 144 to the upside. We're almost there. I want to get a definitive breakout above 144, 145. I think that would be a bullish signal for JP Morgan. Coca-Cola, I like this pattern. I see a move up. I see sideways consolidation, equal highs, rising lows. Could even call this, equal high there, rising lows. Maybe not a well-defined, but maybe a little bit of a sloppy ascending triangle. Breakout above 64.25 to 65, somewhere in that area, would be very bullish on Coke. McDonald's trending higher. I like this pullback to the 20-week moving average. I think this one goes higher. 3M, still struggling, trying to put in like some sort of a positive divergence, but we got to get back through the 20-week. I mean, if you look back over at the last 2 years or so, almost 2 years, we've only had maybe about 5 or 6 weeks where we've been above the 20-week moving average in a market that's been going much, much higher, especially since October of last year. Look at where we were in October and where we are now. We've gone nowhere. This is a terrible performer, and I would continue to stay away. Merck, it's weakening. It's been strong. It's weakening. I don't like this negative divergence on the weekly chart. So I think we probably have a little bit more downside, maybe around 102, 102.50. Give it a look. All right, Microsoft. V bottom. I mean, this is a long-term cup. If we went out further, you'd see this lengthy uptrend. And now what we've completed is a cup. We could get a handle back to 300, 310. That wouldn't be a horrible thing. Microsoft's been up. It's very overbought. It needs a period of consolidation. That wouldn't be a bad one. I do like Microsoft a lot, though. Nike, trying to strengthen back off. You can see we went down and tested this low. We really want these recent lows to hold, especially that one a couple weeks ago around the 102, 103 area. That one needs to hold, and then we need to get back up and take out this double top. Still got some work to do, but Nike at least is moving in the right direction. Procter & Gamble. Hold on one second. Just get a little bit of water. Got to finish this very quickly. So Procter & Gamble, clearly the top's 157 to 160. That's where we got to negotiate. We are putting in some rising lows. I think this low right here is important, around 135, 136. So that's your range, and we're sitting in the middle of it. Let's see which way it goes. My guess is we probably work our way back toward the high. Travelers, I think this is a nice uptrend. It's not going to, certainly not an Apple or Microsoft taking off, but it has been a pretty steady performer, pays a nice dividend. I think it's a good, fairly safe stock. Nothing is safe, but relative to some of the others we've looked at, I think Travelers looks pretty benign in terms of the volatility. United Health Group, UNH, I look at these lows right here because this is where we set that last high right up in here. I would watch these lows. So I think you're in a 440 to 550 range. We went down almost to that 440 level. I think this is, could be an opportunity on UNH. I would just be careful if you close down below 440. Visa, not looking nearly as good as American Express. Very much sideways. The high we set back in July 2021 still stands. Haven't been able to get that breakout. We are trending off of the October low. We're trending to the upside. Maybe watch that 213 area, the 50-week moving average as support. And then clearly you got to get back up and take out that July high. So we need to see a weekly close above about 245, 246. Verizon Communications, downtrending. This one's a little bit like Disney to me. I can't tell you why it's so weak, but I don't want any part of it. Walgreens Boots Alliance, same thing. Watch these lows down here just below $30. We're bouncing off of it right now. Can we get back through that 20-week moving average? Because that has been a very difficult thing to do for Walgreens over the course of the last year and a half. I mean, really going all the way back to January of 2022. You can see all these false breakouts. If it wasn't for that right there, that period at the end of last year, we would be a year and a half in now trying to get through the 20-week moving average in a market that's been going a lot higher. So again, just not a good stock. Stay away from it. Walmart, I like this breakout here on Walmart. If we can sustain this, get through about 158, 159, I think Walmart's set to run. I really like the way this chart's set up. And that's it. So I did get through the Dow 30, but we got to finish very, very quickly. So let's see. Next up, earnings spotlight. We have a strong earnings chart list. And what I do is I try to annotate some areas that I think look fairly strong in terms of support. There really aren't any strong earnings to go over. So I just wanted to pull up. But we have over 500 companies on our list right now. So we could go out. I'm just going to randomly take a look. Maybe pick a couple good ones. Now, well, this one's been good in terms of straight up move, but not really a good time to buy it. Negative divergence. This is in the semi space. Stock's been going up. You see that PPO rolling over. This is one that would make me nervous. If I was in this and had profits, I'd be taking it just because of the way the divergence looks there. LNTH is one that has pulled back into this gap support zone. So this is a stock that I would be interested in. I might check options just to see if they're, heavily played on this stock. But other than that, I like this pullback from 100 down to, we're down about 15% into option or into gap support area. All right, I want to wrap up now with the 3 you must see. And I'm going to start off with Nike. We talked about Nike earlier. And let me see here. Yeah, here's the move. We showed it on the weekly chart, but look at the daily chart climbing back up above the 20. I would expect to at least go up here and challenge this overhead resistance around 115 to 117. There's your 50-day moving average at 117 and change. Look for that move to the upside. I think it looks pretty good. How about SYK, Stryker? Healthcare did not do well yesterday, but Stryker broke its downtrend, gapped higher, and look at the volume. I think this is one that could run along with Zimmer. This is Zimmer Biomed Holdings, another one. This one gapped up, went up, tested overhead resistance. It's one of our portfolio stocks. I think it just completed a cup. Might get a little bit of pullback to the gap support, but otherwise I think it looks great. That's it for me. I appreciate everybody tuning in. I'll be back next week on Monday for your next Trading Places Live over at earningsbeats.com. That'll start at 9 a.m. Hope to see you there. Be careful the rest of this week. Options expiring, but have a great week and weekend, and I'll see you next week. Happy trading.